The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 16th Turnaround Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, well, just let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, just put radio show question, and of course, inside the Tiger's Den, well, any ping will do, Vasily. So let's go ahead and get this show started on terrific and Turnaround Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Les Show. Right now, the Dow trading up 205 at 23,476. S&P up 24 points. 2588 is what she's printing at. NASDAQ 100 up 1 4/10%, 6348. Russell's up 1 8/10%, leading the charge the upside. Semis are right behind it. They're up 22 points out here. You've got the VIX back nearly 12%. That's going to be a very important reading come the end of the day. The market's being up. There's not a single one of you in the listening audience that has listened to the show on and off for years, really now, but certainly the last several months. There's not a single one of you that didn't anticipate that the market would be up today, or certainly at least this morning, right? Not a single one of you. There was nobody out there that when the market was moving lower jumped on that short train. And that is a beautiful thing, because you knew that the closing one-day rate of change in that spot volatility index, you knew what it meant when it was like about 13% yesterday. Well, right now what we have is a minus nearly 12% out there. So today's closing is going to be muy importante in communicating to you and I what the next move in the market is. So we'll talk about that. You've got gold up $2, no big deal. Silver up 12 pennies, no big deal. Light sweet crude back 11 cents. Leading the charge here dollar-wise to the upside. That is NetEase. That's up $22 or 7%. Restoration Hardware up $20, 24%. Google's up $14. Amazon's up 10. Let's go ahead and make a peanut butter and jelly sandwich out here. SJM Smucker up 9%. Almost Family. Seems like family to me. They're up nearly 18%. To the downside, it's Bid Auto Holdings down about 10%, 450. Diplomat Pharmaceuticals off 22%. Why? I don't know why, but it's down 3% or $3. You've got Buffalo Wild Wings off $3. Best Buy down about 3. So plenty to look at. But of course, what I want to look at is what you want to look at. At this stage of the game, no emails in, and a couple of requests inside the Tiger's Den, so we'll take a look at that. Let's first go to these markets. Let's go try to figure out what are the markets communicating to you now. Let's not cloud things up. Let's just make it as simple as we can. We'll start with the advanced decline oscillator reading. We have told you for days, really probably more like a week or so now, that it was sellers that were in control of the market. Well, they exhausted themselves yesterday when we saw that spot volatility index close the way that it did, that one-day rate of change. Well, if we take a look at the NASDAQ composite, you can see 4 panels. If you're watching us on Tiger TV, left panel, New York Stock Exchange. Next panel, NASDAQ Composite, new all-time high as we speak right now. Dow Jones Industrials, that's panel number 3, S&P 500, panel on the right. If you focus in on the NASDAQ Composite right now, in fact, instead of focusing, let's just simply blow this chart up out here, you're going to see that the advanced decline oscillator reading is up above 0. I don't know if it's going to end the day above 0, but if it does, it tells you that buyers have now taken control of the market. Now, did you really need me to tell you that? Well, this has more repercussions than just today. And if tomorrow, so we have to go with the assumption, what's the reading in 111? Bullish, above 0. Tomorrow there's additional follow-through, then it just cements the case that the bulls are back in control with regard to the NASDAQ Composite. That's just one factor out here. So, and if the NASDAQ Composite is leading, do you really want to sell into this market? Really? Do you really want to sell into this market? No. Put those sells away. If we take a look at the New York Stock Exchange, we're not there yet. Will we get there? I believe we will. But my belief doesn't really matter. It's got to prove itself. We know that yesterday we got down. We closed below minus 150. Why was that important? That's important just simply because that is where you get oversold readings. Now, put that together with everything else that we had. It wasn't just oversold. It was a bottom. So you've got a bottom inside of the New York Stock Exchange. You have a bottom inside of the NASDAQ Composite, which is really one of the leaders out there. Of course, the Russell 2000 being up big today. When you have the Russell and you have the NASDAQ out in front, folks, that is something you want to draft behind. That's nothing to fear. That's something to celebrate. Celebrate to the upside. If we take a look at the S&P 500, the best tool out here that I found, most consistent tool, is taking a look and comparing that with regard to the spot volatility index. Yesterday, Tom was talking about maybe trying to play that again to the upside. We issued a statement of caution. Don't do it. In fact, was what we said. We said, if you're going to do it, wait for the spot volatility index to get down that 50-day exponential moving average. Looks like that's where it's headed to. Now, that price today is 10.59. 11.07 is going to be the first resting spot, but to a certain extent, it doesn't really matter. What really matters is where does that spot volatility index end at the end of today's trading session. Why do I say that? Well, if we take a look at this beauty of a chart, this chart here shows green and blue arrows. The blue arrows represent one-day rates of change greater than 10%. Why 10%? I don't know. I just know that it works. How well does it work? It's like 90% plus. Show me an indicator that works 90% plus out there, or you don't even have to. All you have to do is just find one to be able to get the real reading of the markets out here. Now, today, we're down below minus 10%. That would be green arrow configuration on my chart out here. And most of the time, look, it doesn't work as well as the plus 10%. But we're only talking about, by not working as well, the difference between probably 90% working versus 80%. So the bottom line is it works really well. And the point that I want to make is when you have a negative, something below minus 10%, it often marks, most of the time, 80% of the time, an initiation move. Ho, ho, ho! Santa has arrived. Santa's in the house. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's get to these questions right away. First comes in from Cam. Steve, could you do your analysis on the euro and the yen? So if we take a look at the euro out here, we've got our first thing we're going to look at, Cam, is our four different TAS market profiles, 60, 240, daily and weekly. And the thing that sticks out to me as I take a look at this is that what the euro has done this week is it's run this little counter trend move that it's had has run right into resistance. That is the bottom of the weekly box, and that's at 1.18629. If in fact the euro could close above that level at the end of the week, then that would tell me that the euro wants to get to the 119 area, 1.1946, and let's look into the futures contract, and if it can close above that, 1.21128. That is the message as I look at that chart. If I look at the continuous contract here, and we take a look at Stevie's other tools, do I see any other specific pattern? We could see it also ran into resistance, this little dashed green line out here. That's a Tom DeMark account level. So that is resistance. But as long as this doesn't close below Stevie's red line, 1.17, then it's going to try to, chip away at getting through resistance. Below 1.17, it's adios, sayonara. It's done its work to the upside. That's what I see when I take a look at the euro. With regard to the Japanese yen, we'll do the same thing. We'll look at the December contract for it. What sticks out to us here, and the reason why we take a look at this is because of its correlation with regard to gold. On a daily basis, the yen is trying to break out topside. It did so yesterday. I'll go ahead and enlarge in the chart out here. The reason I say it did so yesterday is because it closed above a TAS market profile box that had a bearish structure out here. So this could or should bode well directionally to the upside for the Treasury bond futures contract as well as gold. Has it yet? No. Should you jump on that long train? No, I struggle to tell you to do that. The yen is broken out. If you're trading the yen at this stage here, then you trade the yen to the upside, and you would anticipate that it's going to test resistance, which right now would be the bottom of its weekly box, and that's at 0.9043. So that's my take on what the yen and the euro is doing. The next question that shows up here is, could you please explain what you are looking for at the close with regard to the VIX? So we covered the VIX out here. Really important. I mean, one of the important messages will be if you have a minus 10% or lower, something below minus 10%, then Maria, that's going to say that what we have inside the S&P 500 is an initiation move to the upside. That means you take out the highs and you go higher out here. That's with regard to what I'm looking at. With regard to the ES, it would be basically the same message, but slightly different, right? Because things don't just go straight up or straight down. So in the case of the ES and NQ specifically, let's go take a look at those profiles out here. Give me a moment just to, well, just give me, here we are. So if we take a look at 30-minute, no big deal. It's up above all profiles. Same on 60, same on 240. You see the green shoots. The daily, what you're going to be watching for here is 2591.25. That's the top of its daily box. It is a bearish structured box out here. What do we mean by that is the center line, blue line, is closer to the top of the box. So snipers are, they're on deck. They're reloading. The question is, are they going to get bulldozed over? And I don't know that. Look, you close above 2591.25. That spot volatility index is going to go ahead and be at minus 10% or less. You're going to be above a bearish structured profile, just like we looked at in the yen. And it's adios. It's off to the races. You might say, Steve, how can you have so much conviction? I'm just reading the charts. Well, the charts and the patterns out there. And let's talk about Santa Claus and his arrival. Now, Santa Claus's real arrival, that took place, give me a second. That took place out here in August. Now, this is the chart, and I wish I had seen this sooner. Because when I saw this was like when I came back from the hurricanes and said, all right, what are the markets doing here? And I decided to take a look at what's the market, the S&P, the Dow actually. What's the Dow been doing since March of 2009? And that's really represented by the blue line on this chart. That's the average movement by day, as a matter of fact, for that time period. I had been previously looking at what's been the 85-year history of this. Well, times have changed just a tad. And you'll see that Santa Claus's arrival is right out here, basically right around August 23rd, 24th, 25th out here. That's when the market for the seasonal cycle, the favorable seasonal cycle now, we take a look at what the Dow has been doing, that's when the bottom comes in. That's when the Thanksgiving Day parade takes place in the market. Santa is in town, and then it's to the upside. Well, it's to the upside. If this year, and so far it's been pretty much spot on, not day by day necessarily, but pretty much spot on. So what the market should be doing, this doesn't have today's close in here, it has yesterday's. The market should be higher come the end of the year than where they're trading at now. That's what the analog pattern says. You close above this market profile, you get an initiation move out here. It's really in the cards. That's the message of the market. That's what I would be looking at. With regard to the NQ out here, if we go take a look at it and its profiles, well, and we can take a look at a couple other things, you're going to see you're already above the top of its box, 6335.60. You take a look at this chart. This is as bullish as a set of charts is that you can get out here. Sometimes people say, Steve is a bull. It's not me. It's the charts. I promise you to have conviction at all times. You really don't want to listen to the show and me to be waffling back and forth. Now look, if the market is neutral, I'll have as much conviction behind the mere fact that the market is neutral too. It's just a matter of reading these charts. If these are tools that you believe give you an edge, then all you have to do is really go with the tools. As I had said inside the Tiger's Den, no, do not be thinking short. There is nothing as of 1:25 in the afternoon that gives you any reason that I can see, just what I can see, when I take a look at the charts, that suggest that we should be looking for a market top. The signals right now, maybe that at the end of the day's trading session, this could all be different. And if it's different, then we'll read those charts and we will think otherwise. But we've got to go with the team that we have right now. This is our fantasy football team, only it's not a fantasy. This is reality when we take a look at what's going on inside the market. So I hope that that helps to answer your question with regard to what is it that I'm looking at going into the close here for the ES, for the NQ, and for the VIX. Another question that came in, could the Dow Jones Industrial be forming a right shoulder of a head and shoulder pattern? This is one of the patterns that me personally, I've struggled with throughout my career. I've struggled with because I haven't been able to find an edge on it. And who was it? Was it Bud? Who was it? There was one of the contributors at TFNN basically said you can find Head and Shoulders patterns anywhere. I can't remember. Was it Bud? Was it Ed? Somebody out there in the den certainly knows. And I happen to agree with that thought process. I last night just happened to have on, I don't know, Fast Money or one of those shows out there, and that one of the technical guys that was on there. Look, he was showing the Head and Shoulders pattern inside the XLP and saying why it was a sell. Of course, subscribers and I went long the XLP a couple of days ago. Head and Shoulders, I said, I don't think so. But let's go take a look at the Dow. We get back this one.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Okay, here's that question. I want to make sure I didn't lose out on that. So we're taking a look at the Head and Shoulders pattern, and I'm going to just tell you right now, I am no expert in this pattern, and I've just I'm just not. But if we take a look at the possibility of a head and shoulders pattern inside the Dow, could one be forming? Absolutely, could be forming out here. The way I would take a look at it is I've got as the left shoulder the trading session from October 24th. Now the key there, my understanding of a real technical head and shoulder pattern, is that high 23,485.25 should not be taken out. Today's high so far is 23,480.97. So about 5 points away. If you see a close above it, my understanding technically it wouldn't qualify. Now, the distance between, or time spread between, the left shoulder and the head is where we actually have that high. That's on the trading day of November 7th. And the head and the right shoulder should be about the same. Well, if it is the same, it turns out to be November 21st. November 21st is when? Monday or Tuesday, something like that. So, yeah, it could be forming out here. If the neckline of this thing gets broken, it's not. It gives you a measured move to the downside. Well, it's really not a substantial measured move. It could be a measured move. It could be a move. It could be head and shoulders. Could be a sign of retracement. But I just haven't found the probabilities of this pattern to work for my benefit. That's all I'll say. It doesn't mean that it isn't right, but if it were to form into it, then you'd be looking at a pullback of maybe 22,854. Instead, what I would rather do is take a look at things like the advanced decline reading inside of the Dow, see if that gets above zero. I'd rather take a look at price compared to perigee or apogee. I'd rather take a look at what's going on inside the YM and take a look at its TAS market profiles. Well, we're back above the daily. So it says to me the YM is headed to 23,528. Well, if it gets to 23,528, kind of cancels out that head and shoulder pattern out here. As we look at this time frame chart, the only thing that the Dow or the YM needs to do is get above 23,454. That's a market profile on a 30-minute basis that formed here at 1:30, 2 minutes ago. That is a bearish structured profile. I'm not saying jump on the short side, but there is some resistance, should be good resistance, 23,454. A push down to 23,364, if in fact that's where the snipers are hanging out, that would be a pretty good move to the downside inside the Dow equity futures. We'll just have to wait and see how that plays out. We're not seeing any issues in the longer term, 60, 240, daily, quite frankly, and certainly from a weekly standpoint time frame. Alrighty, let's go take a look at this question here. This is from Doc. Doc says, I bought JCP at 364. Let's go take a look at JC Penney out here. Let's look at our 3 time frame charts. Where are those? It's not there. Here we go. So if we take a look at the JC Penney, the question is, think I will have an out before the next earnings? Well, let's look at what J.C. Penney is doing. So you're at 364. It's trading at 316 right now. If we look at the daily chart out here, what you're going to see, Doc, is that what price has done over the course of the last 2, 4, including today, continues to chink away at the top of its daily profile. Now, this profile is totally neutral. The center of the box is pretty much the center of the box. What you want to see in order to get back up towards your 364 level is a close above 321. Now, the last time that price was up here, a couple days ago, was with 33 million shares. You don't have volume behind the move today, only 7.8. So is it going to happen today? It doesn't look likely. If it does, what you really want to be watching is, see, this equity, J.C. Penney, broke down again. There's been many breakdowns. This was a nervous Nelly breakdown on October 27. 93 million shares to the downside. Now, most of those people that bought in there between 312 and 330, when price got down into the 2 level, the 230 level, even though it was just a few pennies, probably were saying, I pulled the trigger too early, and if I could just get my money back, I'd be fine, versus hanging on to J.C. Penney. So you're running into a wall of resistance, market profile resistance, another big push to the downside. You've got resistance at 330. You've got resistance at the bottom of that swing point, which are 361. You've got a rough go when it comes to J.C. Penney. You did see a sign of strength We talked about, in essence, November 10th and November 13th. So you do have a small sign of strength out here. But if we look at all the other profile levels, there's just nothing great to hang your hat on out here. Last week, you did have a bullish reversal signal, but it even says 367 might be all that you get. I wish I had better news for you. Let me just put J.C. Penney just as see if there's anything else that shows up on Stevie's other chart system out here, and there really isn't. Just nothing. So best of luck, Doc, with that trade inside of J.C. Penney, and I hope that my eyes are just simply dead wrong on that one. Let's see what other questions do we have that have come in. I don't see anything else. Have we gotten to everything? No. I think somebody asked, do I have the COT data for the yen? I don't. I didn't chart that this past weekend, Danny, so I don't have the COT data for the yen. It's not anything that I can do live on the show or even really during a breakout here. So I'll try to remember to do it this evening for you, and then just ask me about it tomorrow, because I think I have that data specifically for the end. I don't know how much work I've got to do. So thanks for asking. Sorry that I don't have it for you. Now, what else can we look at? Oh, there were questions that came in after yesterday's show. A couple questions. One was about the Hindenburg omen. And the question was, hey, Steve, I hear you talking about your one-day rate of change in the VIX, but what are you doing about that Hindenburg omen that happened a few trading sessions ago? And the answer is, I wasn't doing anything. I was trading off of what is a more reliable set of data. You see, the one-day rate of change in the VIX has got a very reliable move, bounce or bottom. So you knew what to anticipate and expect this morning when you got up, or whether you were up at midnight, or it was 3 in the morning, or 4 in the morning, 5 in the morning. The S&P ES Mini was up 4 or 5 points out there. You already knew what was going on and what it had the potential of doing. With regard to Hindenburg omens, if I just had $10 for every time that this pattern failed, you and I could go drink some amazing wines, some amazing sakis out here. You'll see all these other red arrows, all of these other omen signals, and basically it's a bad omen. The signal itself just doesn't generate much for you and I. So that's on the Hindenburg omen. I wouldn't worry about the current signal, which is active for 30 days. You might say, well, what is a Hindenburg omen? Well, what it requires new highs and new lows to be above the number of 45. That's the first requirement. Second requirement is the New York Stock Exchange on that day needs to be trading above where it was 50 days before. Pretty easy to identify. And then the third thing is that advanced decline oscillator reading needs to below zero. That triggers a Hindenburg omen. But that's all that it does. It's mostly for blanks, I'll let you fill it in, and giggles. It's not meant to trade off of. Steve Rhodes with TFNN. We'll be right back. I will show you something to trade off of with regard to the NASDAQ 100 when we get back from this break.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Jim writes in and says, Steve, thanks for going over the Hindenburg Omen. You were talking about new high, new lows, and aren't you worried that the New York Stock Exchange is not making new highs out there? And, that's a great question. And the answer is, I'm going to answer it like this. I don't know if you've seen the Bridge of Spies movie. It's been out for, a year or two. Just kind of a fun movie. Actually, a true story. So actually a cool movie. You always like true stories of, guys that go beyond up in the, that really give from, that's how they meet their need for significance. You can meet each of us have basically 6 or 7 human needs. They're all, in essence, the same. We're all striving to fulfill those needs. We just have a different order. So we each have a different recipe for fulfilling. And one of those needs is a need for significance. For some people, it's up on top, okay? And we've got a bunch of perverts, okay, that are in the Senate and the Congress and in business, okay, all over the place out there. Let's just call them what they are. That's actually being kind, because I believe I can say that on the air. But those guys meet their need for significance in a negative way, in a disempowering way out there. They ought to just be shot, taken out back, shot, put out of our misery, their misery, because we don't want to hear about these guys anymore. Al Franken, you're the latest one that's in there. Just adios, these guys. Just gone. Just toast. But in any event, besides that, you meet your needs in either an empowering or a disempowering way. And the guy, I know Tom Hanks. I don't remember the name of the guy, the attorney that he played there. But that guy, now, significance may not have been his number one need. I don't think that it was, but he still needed to fulfill that need, and he met that need in a way of giving to more. Quite frankly, I hope that that's what I do for each of you out there. When I come here and I give you the conviction behind what the markets are doing, it's not to say I'm right, somebody else is wrong out here. It's to say I've got conviction in being able to read what these signals do and have enough confidence in them to be able to provide that to you. But it's really providing you that information, that cool information, and being able to provide and to give more. That's what I like to do for everyone. You, whether you're a subscriber, even if you're not a subscriber, which is really when it comes. And so the point, Jim, that I was trying to get to, I just took the long road to get there, was the individual that the attorney was represented. The question that was always posed to him, and I love it, was, aren't you worried? And his response was, would it do me any good? Now, in the case of the new highs, new lows thing, if we go back to this Hindenburg omen out here, and really what Jim is talking about, the actual new high that came in, new 52-week high, took place on October 3rd. And we've really kind of seen a declining in the line ever since then, right? If we just take a look at and just kind of measure the tops on the way down. The thing is do I worry about it? No. And the reason I don't worry about it is I've never found a good trading decision that could be made from that. I just haven't found it out here, and I've searched. The only thing that I've came up close with, and Larry in Detroit, I think it was, that sent this to me yesterday, and I think Larry is on to something there. I just have to do more research, is when you have these different bullish or bearish, or we'll just simply call them crossover signals, looking at when the new highs or new lows, just simply the number of them, when you have a crossover. The last time there was a true bullish crossover, we'll call it, where new highs crossed over the new lows line, was back here on August 31st. And if it used that signal to go along at that stage, yeah, that was a pretty good signal. Now, there was I think that the question that I have is, when is it best to use that signal? Thus far, in just the minimal 15 minutes work that I've done here, says it's best to use that when you get a bullish signal to have the advanced decline oscillator above zero. Versus if you get the negative signal, a bearish cross, it's best to have the signal when the advanced decline oscillator is below zero. So what we're seeing right now today, potentially a new crossover, but that AD line is below zero. But if you got the AD line above zero today or tomorrow, well, that would then give you the so-called bearish signal. I found that, Jim, to be really in just a few short minutes to be a way better tool than worrying about the mere fact that the New York Stock Exchange has not made a new all-time high. That's right. Thank you, Mark. It was James Donovan was the attorney. Cool movie. If you haven't seen it, for me, the best part of the movie is the very end when you find out how many individuals this guy helped in the United States out here. Pretty cool. Pretty cool. So thanks for that, Mark. Now, a tool that is helpful for you and I to understand where this market is headed to, and we need the end of the day reading, as much as I hate to use that expression, but we do, is taking a look at this chart here, perhaps the most important chart of the day. We've got a few of them. And if we take a look at the QQEW, you know how we like to say that that is the equal weighted version of the Q's ETF out here. It's the leader. When you see divergent patterns, it is the one that's giving you the signal. Well, this thing busted to new all-time highs today. Once it got above, or if it closes above the high from October the 20th, the high being 56.52, we're at 56.99. This says that the NDX 100, and it's doing it kind of like right now, is going to go ahead and perhaps close at a new all-time high. Line charts are always based on closing signals. You get the two in agreement with each other, it's just simply screaming to the upside. So, Maria, you put that with the NQ closing above, or looks to be closing above the top of its box. If you put that together with the NDX 100 bullish market breath out here, it is very hard. Look, I can find a couple intraday charts that would say, okay, if you want to take a short, now is the time. You'd say, what chart is that? I'd say, well, I just simply come take a look at the NQ, which has basically been in wave G forever today, and we might get a confirmation of that seventh wave move. Same thing that was formed at the bottom. That may happen by the 2 p.m. time frame. So, if you're looking for short-termer type stuff out there, yeah, maybe that would be it. Maybe a couple of other things. Question, is 6,400 a magnet for the NQ? Because that is the square root. If we do the square root, what is that? What is that number out there? I can't do that math in my head that quickly, but I guess it's 32, something like that. 320. I don't. Let's not do that. I don't want to. I don't want to start doing square roots in my head out here. I'll be pulling out my hair, and you have to admit I've got a receding forehead as it is, so I'm trying to protect that. But if we take a look at something else, what that we can use as a tool as to where maybe the NQ is headed to, we'll try to punch this chart up on our screen. We'll do this on the fly, so to speak. We don't want that. We want the NQ. Where is the NQ? I believe it would be this chart right here. And here's going to be your TAS market profiles. And you say 6,400. I say 6,900. Now, it's not really me that's saying it. These are the horizontal trading ranges from a monthly basis for the NQ out here. And just clearly broke above a resistance level of 60.58 last month. Could it find, a little bit of resistance mid-stroke between 60.58, 69.77? Yes, maybe that is even close to your 6,400 area. But it looks to me longer term, what the NQ really wants to do is get up into that 6,900. That's taking a look at the monthly time frame chart for the NQ. We've got the Dow. She's up how many points? She's up 190, 200. S&P's up 23. Wouldn't surprise me for this to be up 300 points by the end of the day. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. Dow's up 198, S&P up 23. Joan writes in and says, hi, Steve. Love your show. You mentioned earlier that you went long the XLP. Would you be kind enough to share with us why you went long the XLP? I would love to, Joan. I'll show you exactly. Can I call you Just Joan? Reminds me of another movie. I think that was the movie. Was that Romancing in the Stone? Didn't they call her Just Joan in there? In any event, I mean that in a affectionate way. But let's go take a look at the patterns that are out here. What the XLP did on a weekly as well as a daily basis was it formed a Gartley buy pattern, one of those beautiful patterns that Larry Pesavento taught me about. Now, I've taken it to a different level. And when I say a different level, I studied all these different patterns. And the thing that I focused on the most was when the pattern didn't work, why? Why didn't something work? Because the idea of what each of us should do is take the works of others, figure out what they missed, and improve upon them. That is how we have all the different things in our life today. Everybody improves upon something else out there. Well, I think I did that. I know that I did that because I've seen how it improves the odds of it working versus failing. So here is the Gartley on a weekly basis, the Gartley buy pattern, about a 0.618. The actual retracement was 0.668 out here. We just use those as guidelines. But where we got the signal on a weekly basis was when it formed this very bullish pattern out here last week, which was a nice little three-river morning star pattern. Now, this is a weekly chart. And the real key thing here, Joan, to be looking was we knew that price oscillator, difference between the 39 and 19-day exponential moving averages, or in this case here, weekly averages, we knew that price oscillator had gotten down to zero. We also knew that price had gotten right up to Stevie's red line. And that's where we really get the meaning of what the true intent of this is. Once we got price above Stevie's red line, the price oscillator turns up. The XLP headed back to its highs, probably an A to B equals CD to the upside. So, Joan, that one's for you. Stay tuned, folks. Your favorite polar bear. I mean it affectionately as well. David White's up next. After that, we've got Tom O'Brien, 3 to 5. Andy Heck from 5 to 6. Oh, I won't be with you tomorrow, so I'll see you on Magnificent Monday. Have a great day and a great weekend.
Larry Pesavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies.